Hi, this is Dan Jones with RE/MAX Real Estate Experts and Dan Jones Home Selling Team video blog. Thanks for stopping by, and today's topic is how cheap is money? Really, how cheap is money? And it's ridiculous cheap. A lot of folks look at money and say, okay, you know, it's low, it's going to stay low forever. Has traditionally stayed low over the last year or two. We did see about 12 to 14 months ago a pretty good increase, and then rates dropped back down again. But for the foreseeable future, the question is, how long are rates going to stay this low? And today I really want to look at a few numbers that just kind of show you how low rates are and what they were just a few years ago, and just what not too many years ago when I bought my first property, what interest rates were closer to. So looking at these numbers, if we had an individual buying a property by themselves and earned $50,000 a year, and they had zero debt, no student loans, no credit card debts, no car payments, and they put $20,000 down on every single one of these four scenarios, this is what a person would afford. And in regards to waiting too long to buy a home, it'll kind of give you an idea, hey, if I wait another 2 or 3 years to buy a home, where interest rates going, and you know, how much is that home going to cost, and what can I afford in a few years. So if we had a 3.5 interest rate on the person who made $50,000, no debt, put $20,000 down, that individual would be able to afford about $295,000 on a property. So looking at the next scenario, if an individual had a 4.5% interest rate, so 1 interest point more with the same terms of $50,000 a year salary with zero debt, that same would earn about, actually be able to afford about $270,000. So about a $25,000 decrease in affordability. Then if it increases 1 more percent up to a 5.5%, the affordability is down to $248,000, which is a huge jump from the $295,000, and that's only 2%. So back when I originally bought my first property, interest rates were closer to 7, 8, and some folks were paying up to 10%. That didn't have good credit. So let's suppose we rewinded the clock a few years ago for someone who had average credit and looked at something saying like 10%. So a handful of years ago, with the same $50,000 income, zero debt, your $20,000 down payment at a 10% interest rate, you would be able to afford $178,000. So interest rates are huge. Money is very cheap right now. So if you'd like a better breakdown, you can always reach out to us. Hope this was helpful for you, understanding the cost of money and how inexpensive money is at this point in the game. And I look forward to hearing from you soon. Talk to you soon.